Hi, I'm Don Havre with the real estate firm in the Tri-Cities in the state of Washington. I work with my daughter Michelle, and two of us form the Havre team. Today we're going to be talking about the real estate market. It's not uncommon for people to ask me, Don, how's the market doing within the Tri-Cities? And I really know what they're asking is this a buyer's market situation or is it a seller's market? In other words, are prices falling or are prices increasing? Now, to really answer that question, we have to ask ourselves, what market are we really identifying? In other words, could we have both a buyer's market and a seller's market and a neutral market all at the same time within the Tri-City area? And the answer is definitely yes. So if we take a look at price range, we might be dealing with homes within 200,000, 250,000 as a market segment. Conversely, we could also be looking at a market segment within a specific city within the Tri-City area. As an example, Pasco versus West Richland. And we might be looking at a neighborhood within a city as well. We know that there's a general trend between Pasco and Kennewick where the demand seems to be moving generally to the west. With the higher demand to the west, we have less supply. That impacts upon the supply and demand curves. We really have to ask ourselves how many months of inventory are available within a specific segment of the market. In order to calculate that, we within the real estate firm use what's called the 3-month sales method. In order to come up with the absorption rate or the number of months of inventory that are available, what we do is we take the sales for the 3-month period, we divide that by 3, and that gives us the average sales for a specific month. We take that figure of the average sales per month and we divide it into the number of homes that are presently for sale, and that gives us the months of inventory. Now, once we know the months of inventory, what does that tell us? Well, if we have 1 to 3 months of inventory, that's generally identified as a seller's market situation. If we have a balanced market or a neutral market situation, that's frequently referred to 4 to 6 months of inventory. And finally, if we have a buyer's market, that's 7 months of inventory or more. In October of 2011, within the Tri-City area across all communities, between 125,000 and 150,000, we had 3.7 months of inventory. Now, remember, I indicated 1, 2, and 3 months of inventory is generally a seller's market situation. So 3.7 months is kind of leaning towards a neutral market situation. 275,000 to 300,000, we had 5.6 months of inventory. Once again, 4, 5, and 6 months of inventory is a neutral or balanced market situation. So in this price range, we had a balanced market situation. And then finally, in the 375,000 to 400,000, we had 9.8 months of inventory. We've crossed over the 7-month supply, and we've gone into what's considered to be a buyer's market. Now, there's another technique called the pending sales method to determine supply and demand. And this is a little bit, gives you more up-to-date information rather than taking an average over 3 months. What we do is we identify what's called pending sales. In other words, a pending sale is something where a seller has accepted a contract, but they have not closed on the home yet, or the deed has not passed. So you can frequently identify these homes as having a sold sign out front. To use this particular technique, what we do is take the homes that are for sale, the number, and we divide it by the pending sales for a specific date, and that gives us a supply. And then we'll use the same general rules that we used previously. As an example, let's say that we have 100 homes for sale in a specific area, and we have 20 homes that are pending, and that gives us 5 months of supply. And then we'll apply the previous rule that we had before, indicating this is an average supply or a neutral market situation. When we talk about market value, which is the other side of the equation, we have to take a look at the sales data for a specific range. And when we do that, and frequently we do that through a market analysis, we'll come up with an upper figure and a lower figure. Within that range, we have to ask ourselves, where are we? And to help identify that situation, we go back and ask ourselves, are we in a seller's market situation, a neutral market, or a buyer's market situation? Once we've answered that question, we know within that range where we might want to be. As an example, if we have a range and we know that we are in a seller's market situation, we can be very aggressive in pricing. Conversely, if it's a soft market, we'll need to be at the opposite direction. But we also have to consider the asking price of the competition. And many times agents will not consider the competition. Why is this important? Because we could get in a situation where the asking price of homes that are on the market today is actually less than what the sales market data tells us. If that is the case, we know that we have a market that is correcting, and if one wants to be competitive in this particular environment, they're going to have to be among these homes as far as asking price. Then we have to go back and look at the situation, how aggressive does one want to be. I think what you really need to do is consult your real estate professional, because your real estate professional is going to be able to help you, first of all, get this data, calculate the data, and help interpret the data with you. Well, once again, my name's Don Havre, and I'm with the real estate firm in the Tri-Cities in the state of Washington. If you want to buy or sell a home within the Tri-Cities, give us a call at 509-783-8400 or contact us at ketohomes.com. Thanks.